Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we are going to continue our collaboration series. It's actually been quite a while since we had a guest on the channel, but I am pleased to be able to bring on David Lin of the David Lin Report. David, how's it going?
Thanks for having me on as one of your first guests in a while. Very honored. Big fan of your show. Big fan of your work, Ben. Everyone should follow Ben.
Yeah, I saw David. We saw each other in Miami not too long
We
ago.
did. Yeah.
We got to talk a lot there, and I really like David's opinion. You know, he obviously interviews a ton of people on his channel, and I will provide a link to his channel in the description below and the pinned comment. So make sure you guys check it out. The David Lin Report. Just provide all the links to his socials. So make sure you guys go subscribe to him. And I think subscribing to his channel will help you give sort of a well-rounded view of the market, right? And I think that's what a lot of people would really like to see.
Yeah.
So
Appreciate it.
yeah, so I think what I'd really like to start off with is more so just talking about some of the recent things that have happened. Um, for instance, we have a new administration, right? President Trump took office on January 20th. We saw markets go up into that. Um, I'm curious, what do you think about, all these executive orders coming out from the new administration, and what's your interpretation of how all that could affect the markets?
I'm actually doing a video on that. I'm putting together, well, I can show you my screen if you like. We can talk about a few of these. He signed in the first week more than 200 executive actions and presidential actions. Some of them are executive orders, some of them are presidential actions, some of them are memoranda. I'm not a lawyer. I don't know the technical differences, but anyway, they're like, presidential actions that he signed, 200 of them. I narrowed it down to 20 that I personally believe would have the most impact on the economy. Some of these aren't really like concrete plans. For example, he wants to implement price control so we can delivering emergency price relief for American families, defeating the cost of living crisis. No surprise, he blamed Biden for inflation. Biden administration is estimated to have imposed almost $50,000 in costs. This is interesting. This is something he talked about during the campaign as well. He wants to make the administration more efficient and reduce bureaucracy such that the administrative cost to the American citizen is reduced from 50,000 to 11,000. It's not explained exactly how he's going to do that. I talked to some economists about this, and a lot of what he wants to do, right? He wants to make housing more affordable. He wants to increase the housing supply. Actually, that sounds exactly like Kamala Harris's plan. But anyway, that wasn't mentioned here. A lot of this is just copy and pasted from prior administration. So we'll see if this actually has any significant impact. This actually I don't think is the most impactful. He's rescinding, as you know, he's rescinding a bunch of executive orders from Biden's presidential term. This is, I'm not going to go through all of them, but a lot of them have to do with energy policies. He's reversing a lot of DEI policies. And this may have a direct impact on energy. On the energy front, on climate change, he's withdrawing from the international climate change agreements. He's declaring a national energy emergency. So this is what it says. The energy and critical minerals identification, leasing, development, production, transportation, refining, and generation capacity of the U.S. are all too far inadequate to meet our nation's needs. This is pretty key because recently in the news, China has banned critical minerals exports to the U.S. So China's retaliation against tariffs is multifold. They can do many things to retaliate against the U.S. It's not always a tit for tat. 25% tariff, we're going to issue 25% broad-based tariffs. They have other cards on the table, including the banning of critical minerals, including antimony, germanium. Some of these are used for defense. Making antimony, for example, is used for ammunition. And they have the largest production capacity in the world. And so they have that chip on the table and they're using it. They recently banned all exports of certain key critical minerals, and the U.S. needs to step up its game on diversifying its critical minerals supply chain and mining of their own. And I talked to a lot of miners on my show, and one of the biggest gripes that they have is that the permitting time in the U.S. is too long. If Trump's administration can fix that issue, at least it could kind of help. So we could potentially see a boon in the mining sector through this, overturning Biden era environmental protection in Alaska. I don't know if you remember, but 2 weeks ago, right before Biden's last week in office, he banned offshore drilling in some key areas. It's not a huge like percent or yeah, it's not a huge part of U.S. oil and gas production overall, but it was kind of a thorn in the back um, of a lot of energy executives. Temporary withdrawal of all areas in the outer continent shelf from offshore leasing. So yeah, he's overturning this. Um, Pausing U.S. foreign aid for 90 days. This is the key. So a lot of the geopolitical risk premium that's baked into the markets, analysts are saying may be reversed if, and this is a major if, he's able to secure peace in the Middle East as well as Ukraine. So Israel recently, as you know, folded to U.S. pressure to um, agree to a ceasefire in Gaza. It's unclear as to whether or not this ceasefire is actually going to be respected. Trump himself, in the press, has said that, hey, look, I am not confident, that those are his words, I'm not confident that this ceasefire will hold. So we'll see what happens. A lot of senior Israeli military officials resigned after Netanyahu agreed to the ceasefire. So Netanyahu is suffering kind of a political crisis at home. In Ukraine, Trump has recently, this is one of his other executive orders, Trump has stopped giving aid to Ukraine. Some of his more senior officials have took it one step further and is now kind of taking back existing aid that was promised. But what this executive order really is to stop giving aid as of now, not tomorrow, starting tomorrow. It's not the aid that was already promised that's still going to be delivered. But anyway, he wants to force both parties to come to the table and have a negotiation. Many Ukrainians I've talked to just want an end to this war. They just wanted to sit down, negotiate, Russia, U.S., Ukraine, and sort out some sort of resolution. If there is a resolution, a lot of the geopolitical risk premium could be that's baked into stuff like gold, for example, treasuries, arguably. That's going to come down a little bit. What else do I have here? Border controls. This really is just an issue of labor supply of like blue collar jobs that a lot of immigrants are filling. Potentially tighter labor supply, potentially downward pressure on housing if Trump is really serious about border control and stemming immigration. So I would say those are the primary buckets that I've kind of organized these executive orders into: the economy, energy policies, border control, and immigration. Oh, and the establishing of the Department of Government Efficiency. Doge is already, on the first day of office, on inauguration day, Doge was already sued like 3 times or something for failing to be fully transparent with the federal government. Vivek just quit. He and Elon doesn't see eye to eye on a lot of the issues and the direction. I think Elon just wants to cut stuff. Vivek wants other things. But anyway, it's unclear as to whether or not this Doge is even going to take off. So a lot of things to follow, a lot of moving pieces that are in the works. But I am curious as to how Trump is going to implement his price controls, because several people have told me that tariffs are inflationary. Several people have commented on how energy prices aren't going to come down right away, even if Trump wants it to. So I don't see inflation being a direct impact or result of Congress and an executive order. But anyway, that's my summary.
No, I think it's I really appreciate the summary. It's good to get caught up on the news. I mean, it almost seems like there's been just so many executive actions over the last, week or so. It's kind of hard to keep up with all of them. I'm
Yeah.
curious, what's your interpretation with the market's reaction to all this stuff? I mean, the market's kind of been a little all over the place recently. Do you think
Hmm.
that the volatility, and not that we've seen that much volatility, but we have seen a little
Yeah.
bit. Do you think it's at all related to the uncertainty with all these executive actions? Or do you think, or you sort of like, what's going to come next? Or do you think it's more so related to, the recent, revelations with what was it, DeepSeek, that sort of stole the headlines here?
Well, if you're talking about yesterday, we're talking on Tuesday, the 28th. So Monday, there was a big $1 trillion of tech or capital overall in the markets was wiped out. So that was a big correction in one day. A lot of the losses were kind of recovered today, that is. So the Nasdaq's up about almost 2% as we're speaking today. Yeah, the VIX is not, if you take a look at my screen here, on the volatility front, the VIX is not spiking dramatically. It's still like hovering around its uh 2024 band. So we're not seeing huge spikes in volatility. The Move Index, which is the bond version of the VIX, is it's not spiking dramatically either. But I will say that a lot of what Trump has promised to do, he is signing into executive action on the first week. So I don't, from what I've observed, there were no major surprises. I think the one major surprise, and we can talk about cryptos in just a bit, he hasn't yet signed in a Bitcoin strategic reserve. That was kind of a disappointment to a lot of Bitcoin people, but he did sign a ban to CBDCs, which he promised on the campaign trail.
Well,
Like that
what
was an executive order.
one of the things about the strategic reserve for Bitcoin was sort of if you look at like the betting markets, I think at one point there
Hmm.
was fairly high odds that there was going to be a strategic Bitcoin reserve within the first 100 days. I think it even
Yeah.
passed 50% at one point. Now
Let's just,
now it's dropped back down quite a lot. In fact, maybe to like 17%, 18%,
yeah, it's 15
15,
now.
yeah, 15%. And I've noticed one thing that kind of happens with these crypto market cycles. Um, it has basically been like Bitcoin kind of leads the show for a while, and then we tend to find other things that are important in post halving years, right? So attention sort of moves away from Bitcoin and to other things. Do you think that that's going to happen again here in 2025, kind of like it did in 2021 and 2017, or do you think it'll play out differently this cycle?
I'm sorry, can you clarify what exactly is going to happen again
Do
this
you
year?
think there's going to be more of a so like one of the things I've spoken with you
Right.
about on
Sure.
your channels like Bitcoin dominance, right? We've talked a little
Yeah,
bit
sure.
about that. Do you think that people are going to become sort of more interested in the other parts of the cryptocurrency asset class
Hmm.
as this year goes on, thanks to say like things like deregulation and changing the narrative from like a strategic Bitcoin reserve to a strategic crypto reserve or a digital asset,
Hmm.
whatever it is. Do you think that that's going to make people a little bit more interested in the rest of the asset class than just Bitcoin?
The answer is yes. I think once the government starts to pay more attention to other digital assets, definitely there will be more interest just naturally in the news. But I think, um, and I think you and I have talked about this before, an altcoin cycle typically follows a Bitcoin bull run. And so people are naturally going to be more, the retail crowd that is I think they're going to naturally be more interested in the altcoins after a big Bitcoin dominance bull run anyway, just because they want that additional leverage and they want that additional risk. So I think it's just a function of waiting, and it's going to happen. So yeah, whether or not it's going to be XRP or Solana or Ethereum. This remember last bull run 4 years ago, Ethereum was all the hype. In fact, I can't remember how many interviews I've done on ETH flippening. Like no one's talked about that this cycle. I have not done a single. I don't know if you've ever talked about ETH flipping in the last 2 years, but that narrative just died. So that was huge in 2021. That is no longer huge now. What's going to be the next thing that people are going to be talking about to flip Bitcoin? I don't know. The XRP guys want XRP to be the thing, but we'll see. But yeah, the short answer to your question is yes.
Yeah, I think I thought ETH would bottom out against Bitcoin around zero point zero 0.03, and now that's kind of being called into question as to if it's going to bottom there or not. I don't know. Um, I one of the things we saw last cycle was we saw ETH bottom against Bitcoin once the Fed sort of pivoted from quantitative tightening to quantitative easing, and that's something we actually haven't seen yet this cycle. One of the things I saw a headline recently that
Mhm.
you know President Trump is probably going to start applying some pressure on Powell to cut rates more and to perhaps be more
Yeah.
accommodative. Do you think there's any risk there that if they do cut too aggressively or they maybe switch back to QEs, or is there a risk of another inflationary cycle? I know you've interviewed a lot of people on your channel. I'm sure some of them have spoken about sort of these
Yeah.
inflationary waves that we saw in the 70s. Do you think that's a risk this time? Or does sort of this slowly rising unemployment rate kind of offset some of that risk somewhat?
I'm trying to find the clip. Oh, there we go. Yeah, here. Look, this is I screenshotted this when it came out. Um, Trump lobbed his first volley at the Federal Reserve. He will apply pressure to bring down interest rates, speaking via video to an assembly of global leaders at the World Economic Forum. The president, in a wide-ranging policy speech, did not mention the Fed by name, but made it clear he would seek lower rates. I'll demand that interest rates come down immediately. Like there's not even like ambiguity there. Like he's going to demand that they come down. The Federal Reserve, for those of you watching who may be wondering, does not have any legal obligation to listen to the president. There have been instances before where pressure has been applied. Arthur Burns, for example, the Fed, and the president at the time, Nixon. So there's like that was literally taped. So we can draw examples from history. To your question about whether or not interest rates would cause inflation coming down, if interest rates were to come down more, the answer is probably yes. I think people are concerned about the labor market heating up already. The last jobs report beat expectations by 100K, was 254 or 255,000. Non-farm payrolls added in December, and the expectation was 155,000. If you look at the NFIB Small Business Survey Optimism Index, I can pull that up. It's just been on a vertical climb. This is a very interesting chart, actually. I want to show this real quick because a lot of people were concerned about whether or not businesses are feeling really pessimistic about the economy. And if you take this survey here, it's not it's the exact opposite. So let me, here it goes. So if you look at this chart here, this is the optimism index, straight line up after the Trump inauguration. The last time it happened, incidentally, was also when Trump was inaugurated the first time. Small businesses are really optimistic about Trump's pro-growth policies and lower taxes. By the way, Trump isn't lowering taxes per se. He's just extending the 2017 tax cuts, which Scott Bessent, Treasury Secretary now, has said that if they do not, he testified to Congress right before the inauguration. He said that if we do not extend the tax cuts, Americans will face an economic calamity by year end. The middle class will face the biggest tax increase ever. So I think he's probably using hyperbole there, but to his point, there will be a big tax increase if the House and Senate do not pass this extension. But people are betting on this tax increase or tax reduction extension being actually implemented. So on the inflation front, businesses are feeling good. They're not laying off people just yet from the data that we've seen, although there could be revisions to the BLS data. Interest rates are, the Fed has indicated that they're a little more cautious in cutting now. There's a 0% chance the Fed will cut by tomorrow. We're speaking like, yeah, literally by tomorrow is the FOMC announcement. If they do, that's going to be the mother of all rallies, but I doubt it. So going into the rest of the year, the markets are pricing in, I think, 2 to 3 more rate cuts. But the Fed Jerome Powell has said very clearly that he will pause if necessary. Like he's not committed to cutting rates for the sake of cutting rates, just because inflation does look sticky. So it's not like interest rates coming down will cause inflation to go up. It's already kind of happening because inflation isn't coming down as fast as they would like, and they've been cutting rates since September. So again, the short answer to your question is yes, that is a major risk.
One of the main narratives in 2022 was sort of like an impending recession. And back then we even got 2 consecutive quarters of negative GDP. I think one of those was eventually revised away to actually be slightly positive. With the yield curve recently uninverting, I guess it sort of raises the question, right? Like back in 2022, 2023, a lot of people were really thinking there would be a recession, and there wasn't really that much optimism, right? A lot of people were very pessimistic back then. Now, I just saw that index that you showed. It's really it's going up, right? Is there a risk at all in the next couple of years that we get one, like kind of after everyone thinks it's like the risk is behind us, or do you sort of more so subscribe to the theory that we had it in 2022 and it just happened before all this other stuff happened, and we're just everyone's moved on at this point?
I actually agree with that theory that a technical recession, well, definitionally a technical recession did happen in 2022. They were just The National Bureau of Economic Research has 7 variables that they look at, including employment and industrial production, so on and so forth. And some of these other indicators weren't flashing red. For example, in 2022, there were 2 quarters of negative real GDP growth. However, unemployment didn't dramatically spike up during that time. And so it was not perceived as a recession at the time. I would say that, first of all, the stock markets were down. Gold was down. Bitcoin was down. There was a bear market across all asset classes. Even on YouTube, I wasn't doing YouTube at the time, but there are many creators who were complaining about how their ad revenues dropped by 50%. If you take a look at sentiment at the time, it was at a multi-year low. I think a recession already happened, and the subsequent years were just a recovery, both in terms of economic growth and in terms of market performance. To your point about the yield curve, let's take a look at how the yield curve has traditionally performed right before a recession. The yield curve typically uninverts right before a recession, which means when it inverts, it goes negative. That's usually an indicator that there will be a recession in the next 6 to 12 months. So it's happened pretty consistently going all the way back several decades. This particular chart only goes back to the 80s, but it's been a pretty consistent indicator. This time is different. This time didn't happen. This is the first time since since the 70s where an inverted yield curve was not followed by a recession. So I subscribe to the theory that this area here should have been gray,
Well,
but it wasn't designated gray.
if you look at the last two in, say, 2000 and 2008, the recessions occurred like, what, half a year later? It's not like from when the inverted to when the recession actually started. Do you think there's a risk that we're sort of celebrating that we didn't get one when maybe we just haven't given it enough time? Because, again, during the last two big ones, it was sort of like there was a delay after yield curve inversion between when it actually happened. I don't really know the answer. I've never lived through one of these myself, at least as, during my adult life. I'm just trying to sort of put these pieces of the puzzle together and get people's thoughts on it. So I get it. I mean, we haven't had one. I just was curious if you thought there would be a delay or if it's more so something that this time is different.
I don't know the answer to that. I can give you the narrative for both outcomes, and then the audience can decide which makes more sense. And then maybe I can comment on which one I think makes more sense. So the case for a recession coming up, to your point, maybe there hasn't been enough time. To your point about the yield curve, it has to have uninverted back to above zero for quite some time, a few months before the gray bars start to kick in. I interviewed Tom Honig, who was the former vice chairman of the FDIC, and he presided over the FDIC during the great financial crisis. The Fed had already started cutting rates before the Lehman collapse. As you recall, the Fed funds rate started coming down in 2007, way before the banking crisis actually happened. And the yield curve was already kind of inverting around 2006, 2007. Tom Honig and his colleagues at the FDIC were already warning of major banking problems and weaknesses, and they were kind of sounding the alarm bell to the bank executives way before Lehman collapsed. So they knew something was already happening well before it actually happened. And then the great financial crisis happened, and then we had a recession. So you could make the argument that the exact same thing is happening now because the yield curve is uninverting and the Fed is cutting rates, possibly because they see weakness in the economy, or more likely because they just want to contain inflation, they just want to front run inflation. That's also possible. If you look at the Fed statements and meeting minutes, they are concerned about the unemployment rate going up, although they haven't indicated that there's going to be a recession anytime soon. The staff projections are not calling for a recession this year. So on that narrative, again, what we can see is that there is a lag effect of monetary policy. One of my guests, Steve Hanke, who's a regular, maintains that there is definitely going to be a recession at some point, either this year or next year, because of the quantity theory of money, which states that if the money supply contracts adequately, there would need to be an economic contraction. And if you look, let me just pull this up to illustrate the point. M2 money supply. If you take a look at what is happening, what has happened, not what is happening, is that the percentage change from a year ago is now back into positive territory, is growing at 3.9%, although per Professor Hankey's calculations, it needs to grow at least 6% for positive economic growth to sustain. And what happens is we're going to get a lag because the contraction in the money supply during 2023 and 2022 was the greatest since the Great Depression of the 30s.
Right.
So this unprecedented contraction must be followed by an economic contraction. I maintain that it was happening coincidentally with this contraction, but he says that it's going to happen later on. So that's the bear case. That's the recession case. The no recession case is, first of all, earnings in the markets are not collapsing yet. Earnings are the leading indicator for whether or not there's going to be a recession, because if earnings are bad, people are going to start getting laid off. Companies don't lay people off because things are going well. It's like, oh, things are going well, I'm going to prepare for a recession that may or may not happen, I'm going to lay people out. Like, no, it's a coincident indicator. Optimism is good. Sentiment in the markets isn't terrible. Like, okay, we had a bit of a pullback last week, but let's just take a look at stock market performance overall. It's still near all-time highs. If you take a look at the other indicators that the NBER look at, industrial, so PMI is not contracting heavily. The unemployment rate is stabilizing around 4.1%. The non-farm payrolls reports that we've talked about earlier are looking good. One could argue there's going to be revisions later, but we can just speculate. Until the revisions come in, they look good on the surface. And a lot of them were private sector jobs added. So it's not like the government was just adding jobs. By the way, that's another sidetracking. That's another executive order that Trump signed. He's going to make it easier to fire and dismiss federal workers based on merit. So we'll see what that makes sense, what that does. So there are cases to be made for whether or not a recession is just baked in the cake, so to speak, and will happen eventually, regardless of what the Fed or Congress does. But there's another case to be made that the data just doesn't point to an economic slowdown right now, both in terms of the labor market growth, earnings growth, margins growth, and optimism from market participants. Personally, I think the growth rate of the economy may be slower due to the base effect from the previous year. I don't see us contracting into negative GDP this year, if you were to force me to give an answer. So I'm kind of somewhere in between. I think the growth rate may be slower, and that's not my projection, by the way. That's not only what I think. The IMF is making a similar forecast for the global economies. I think the growth rate may be slower. I don't think the growth rate will be negative.
With the markets, I mean, you're right. The markets have done really well the last couple of years. Even today, they're not that far away from an all-time high. What are your thoughts on Bitcoin with all this? Bitcoin has ran
Yeah.
up to what, like 109 on the 20th. It's been about a week since then. Do you think that 2025 will generally be a good year for Bitcoin overall?
Well, first of all, let me just clarify. You are the Bitcoin expert, not me, but I will attempt to answer it at 50% your level. So if we were just to look at the
You don't
Bitcoin
give yourself
price,
enough credit, David.
if we were to look at the Bitcoin price just from a technical perspective, this is a consolidating pattern. So this breakout that has happened in October, right before the Trump election win, if this were not to hold, we would have seen a collapse already. The fact that it hasn't, and in fact has breached above 100K and stayed there, we're at 102 now. And like you mentioned before, we went as high as 109,000. This shows me that that if a crash were to happen, it would have already happened. This is not this exact same pattern that we've seen in 2001, when a peak was followed by a measured move downwards almost immediately. So how long did this move last? This was from March. Wait, what was the peak? April to May. That was a month. So Bitcoin's been hovering above 100K for more than a month now. Same thing with 2021. October was a peak, and then the second peak was November. I remember that very well. That lasted literally 1 month before it went down. Prior moves up in 2017 were kind of the same thing. So this pattern looks a little bit different. It kind of is reminiscent of what 2024 looked like when we had this huge run up in the first half of 24, and it stabilized around that range. A lot of the news that we've talked about have already been priced into the markets, and I think the markets are just waiting for the next institutional move, or the next government move, the actual implementation of a Bitcoin strategic reserve. See, it's unclear as to whether or not the reserve will happen, right? Like we showed, 15% chance poly market, but it's not zero.
That's just
I
in the
mean,
next
if
100.
Trump,
That's just in the next 100 days, though.
yeah, you're right. It could happen after the next 100 days. It could go up if you extended this to 365 days. So Trump has not backed down from its word. He has not said we will not do a Bitcoin strategic reserve. I changed my mind. Otherwise, we would see it go back down to 70 for sure. Positive developments here. Loomis has recently been tasked to chair this Senate panel on digital assets. She worded it very clearly that it's meant to oversee the development of several new initiatives, including stablecoins and a strategic Bitcoin reserve. Like that was stated very clearly. That is still the government's intention. So I think people are just waiting for the next piece of news, and we're going to get this maybe sideways choppiness that we've seen in 2024 for the rest of the year. Several analysts I've talked to have given an short-term upside target of around 120 to 150K. I've heard as high as 180K. I have not done that level of technical analysis and fundamental analysis of them, so I'm just parroting what the guests have told me. But the consensus on my show is bullish. I have not, for the exception of a few people, most of the crypto analysts I've talked to are giving me a forecast between 120 to 180 by year end. Some of the traders are already taking profits. There was a lot of profit taking, obviously, as you saw, around 100K. And some traders I've talked to have just sold their positions. They're like, you know what? Prior Bitcoin cycles have taught us that it's going to retrace back to 50K. I'll wait for a pullback and then I'll buy it more. So there's that narrative. So it's really up to the audience to decide what they agree with more. I think that we're going to get, again, if I were to guess, we're just guessing here. If I were to guess, probably more choppiness, sideways action until we see some more news. What that news could be is either the actual implementation of a Bitcoin strategic reserve, the implementation of a Bitcoin strategic reserve from other countries. Russia signaled that they want to do it. So if we start to see more government adoption, that could be the move higher.
It's really interesting because, I mean, I have seen a lot of people calling for those levels, and as you said, like the consensus generally is higher. And one of the famous quotes, right, is that the bears sound smart, the bulls make money, right? It's easy to sound smart being bearish, but markets generally go up over a longer period of time. But I do find it interesting how, sort of the markets work, and I've even fallen into this trap before as well. How, like in 2022, the main consensus was lower going into 2023. And you can see that's not at all what happened, right? Bitcoin basically just ripped everyone's face off and went the other direction. Now the consensus is basically up. So it is kind of interesting to see how that'll play out. I do agree with you. I mean, I think in the short term, the market is probably sort of like it kind of like priced in like the best thing in the world on the 20th on Inauguration Day. And now the market's kind of like waiting to see, is there actually a strategic reserve, right? Is it actually going to happen? Like, are we going to see all these things that were promised? And maybe the market is just kind of waiting to see, if some of those developments actually come true or not.
And it's also how the SEC will actually implement regulatory changes.
Right.
So we have a more pro crypto, not just Bitcoin, but pro crypto government now, not just people in the SEC, but in the government. What are they actually going to change? Can they effectively make change? That's what the market is wondering. Because if they're just pro Bitcoin and they don't do anything about it, that doesn't mean anything ultimately, right?
Well, it's also tough too because it seems like the asset class, there's Bitcoin and then there's everything else, right? And it seems like the everything else recently has been more mostly concentrated in meme coins, than anything else. And I think that has kind of taken some of the attention away from Bitcoin recently, because I think a lot of Bitcoin maxis were going into this thinking, oh, there's going to be a strategic reserve. it ends up being, a digital asset reserve. That's the
Yeah.
jargon being used, and like, the president launching a meme coin.
I I am look, that's why Solana's done so well, right? Because a lot of meme coins were built on Solana. I'm not
Right,
saying that
exactly.
the Solana rail is only used for meme coins, as a lot of things are built in Solana, but I think it's up 1,000%. Solana is something that beat Bitcoin over the last year and a half for sure. But yeah, meme coins, you see, I think the meme coin craze hasn't hit us fully yet. I think there's going to be, if I may use the word, degeneracy um, later on this year. And I think once you see that, that's your signal for the market top. I think retail is nowhere, we're nowhere near the top for retail excitement yet. If it's going to come, it hasn't come yet, because you and I are both in the media business as well. And are you seeing the same amount of retail interest as you did in 2021? I'm not. I
No,
mean,
and
that's just,
we track a lot of different crypto YouTube channels, and in
yeah.
2021 they were averaging 4 million a day. Today, this cycle, the most they've really hit on average is 2 million a day. So I think
Uh,
I agree with your statement. It either, if it's gonna happen, it hasn't happened yet, right? The question is it going to happen? And I think that's what everyone's trying to figure out. Like, when is retail going to come back in the same way they were here in 2021, right? And that's how you get all season.
I am hugely bullish on. I'm trying to find that article, but I am hugely bullish on stablecoins and stablecoin ecosystems. Um, so if you take a look at this article that I talked about recently, this was penned in 2023, so it's not a new piece. But the Financial Services Committee are seriously looking at monitoring and regulating stablecoins. Stablecoins, blockchain-based assets backed by bank deposits and treasury securities, are at the heart of a dollar-based revolution happening throughout the developing world. Uh, um, so yeah, then it explains what stablecoins are. Basically, it's saying that if the dollar were to preserve its world reserve currency status, it would be partly, or if not mostly in the future, driven by the adoption of treasuries from stablecoins, by collateral stablecoins, that is, because there's different kinds of stablecoins. Algo stablecoins don't need a one-to-one backing of reserves, but collateralized stablecoins do. So they need to physically buy dollars or dollar equivalents, such as treasuries, and put that into reserve. As the world develops on-chain transactions using a USDT or something of that sort, there will need to be a huge surge in purchasing of treasuries, and not just from foreign entities, but from domestic entities as well. That could be bearish for yields. So I'm watching that development.
If I mean if the economy continues to hold on, let's say your projection is right that we don't see any negative GDP. I think the Atlanta Fed just gave their recent estimate today, that last quarter, or I think the estimate for this quarter is like 3.2%. If that propagates through the entire year and we just kind of stay at around 2 to 3% annualized real GDP, do you think that would be a reason for the long end of the yield curve to ultimately go higher than it is? I think a lot of people have been wondering about, like, what is the 10-year doing? What's the 20? What's the 30-year going to do? Like, when are mortgage rates ever going to go back down? Are
Yeah.
are they going? I mean, think about how many people bought houses, thinking they could just go to a lower rate in a year, and here we are. It's 2025. We still haven't seen that. So, what are your thoughts on yields, especially if you are bullish on the economy?
Geez, I ask this question a lot on my show, and like I can't, this is something. This is why we have a market, because the same amount of people that are telling me the yield's going to go, the 10 year is going to go to 5%, are mirrored by the same amount of people that are telling me it's going to go down to 4%. But I guess that's why a market functions,
Yeah.
because if everybody's bullish on yields, there wouldn't be a market. To your point about mortgage rates, the mortgage, the real estate experts I talk to tell me that the mortgage rates are determined by supply and demand in the housing market. It's not really a direct reflection of what the Fed does. It's certainly not a reflection of the short end of the curve. And so, yeah, mortgage rates are a separate issue. Most people are projecting that I've talked to, mortgage rates to stay relatively high, come down a little bit in the first year. This is I've talked to Redfin, I've talked to Zelman. Ivy Zelman and her firm, yeah, Zelman and Associates, great companies. They do a lot of research on the real estate markets. The 10-year yield is currently at 4.5%. It will move up if inflation expectations move up. I think it's not personally. I think it's tracking inflation expectations. not so much economic growth, because the 10-year went up during 2022, and that was when we had 2 quarters of negative real GDP decline. So I don't think it's currently tracking growth expectations. I think it's tracking inflation expectations. Interesting that you brought up the 10-year yield, because I'm going to show you a few correlations that may or may not make sense to you. So, I mean, this is an obvious one, right?
Yeah.
The DXY versus the 10-year. The DXY is a basket of currencies. It's not just the dollar as an index. It's the dollar versus other currencies, and dollar dollar strength is determined by interest rate differentials based on the U.S. currency versus other currencies' interest rates. And so if the 10-year goes up, naturally the differential between the U.S. interest rate, domestic interest rate, and the foreign currency interest rates will be higher. So that's why there's a direct correlation here. You might be interested to know that Bitcoin is also properly correlated with the 10-year over the last year or so. I can't explain this. Maybe you can. It's just something I've noticed.
I think the argument is that as long as I think you're right. I think recently we have seen the 10-year more so correlated to inflation than growth and labor and whatnot. But I think one of the reasons you've seen Bitcoin kind of track it recently is because if the 10-year is going up, it kind of means the economy's not falling apart, right? And if the economy's
Mm,
not falling apart, risk assets don't need a reason to go up; they just naturally go up, right? So maybe that's the reasoning, right? Risk assets need a reason to go down. If the 10 years doing well, and well, if the 10 years going higher, I think that just kind of the assumption is that the economy is still chugging along. Um,
I think this may be I think this particular pair may be a spurious correlation. I don't know, because I think what Bitcoin really is reacting to is the M2 money supply. If you take a look at
well,
US M2 stock, that's been going. I know you talk about this a lot, so you're not new to this, but it's been going back up.
if
So
you go
I think
back,
that's what's going on.
yeah, if you go, I think you're right too. If you go back to that last chart, if you go back to like
Yeah.
2023 when the 10-year was going up, Bitcoin tracked it for a while, but then when the 10-year went to 5%, then Bitcoin sold off. Um, so yeah, like you can
Mm,
see like in 2023, kind of in the summer of
yeah.
2023, like when the 10-year rally started, Bitcoin actually went
Yeah.
back up to 30K, but then as the 10-year continued to go up, that was
Right.
where, and then you can see that Bitcoin bottomed out right when the 10-year topped. Um, but you see that sell off kind of like a month or two
Yeah.
before that, like by Bitcoin from 30K back to 25K. That was while
Yeah.
that was sort of after, like when the 10-year was going up initially, Bitcoin didn't care, but it was the 10-year continuing going up is when Bitcoin was like crap. um,
Yeah. I generally don't think there's like a fundamental reason as to why the Bitcoin price should be tracking the 10-year.
right,
I really think it's tracking global liquidity conditions right now and market sentiment overall. I still think it's a leveraged Nasdaq play for now, Bitcoin. So
absolutely,
it's something that is important to note, because market correlations change over time, and explanations could change over time as well. Bitcoin and gold are perfectly correlated. Is
right.
Bitcoin tracking gold? I don't think so. I can't think of any reason these two variables should be following each other, and they have. So I think something is lifting all tides, and it's not like Bitcoin is following gold per se. It's not like Bitcoin is following the 10-year per se, but I think there's an underlying force of either higher, better sentiment overall for all asset classes, or people just buying on the cheap, or improved global liquidity conditions that are lifting all boats, so to
Yeah.
speak.
It's interesting because obviously, everything's always explainable in hindsight, and you're absolutely right. Right? You can look at correlations and make correlations amongst any different things. That doesn't necessarily mean they're at all related. But David, I mean, look, I've had, it's been great picking your brain today.
Sure.
I think you've kind of caught us up on what's going on in the world, like, or at least what's going on over here with the new administration and everything going on there. And I do appreciate getting your thoughts on the market. It's really good. I mean, I think it's a really good thing to hear people's thoughts, and to kind of use those to form your own, right? To try to figure out, take something from everyone, and then kind of get an idea of where things are. But David, again, pleasure to have you here, guys. If you're not subscribed to David, make sure you guys subscribe to him. Links in the description below. All his socials will be down there. David, I will look forward to having you on maybe here later on this year. We can see how this year's going.
Yeah, let's see if I'm right about my recession call and my, Bitcoin call. But we'll see. Hey, it was a great pleasure speaking with you. Big fan of your work, Ben. I can't wait to have you on my show again. So yeah, catch up later.
Thanks for being here. Guys, give the video a thumbs up, and I'll see you guys next time. Bye.